Hello, everyone, and welcome. Thank you for joining us for this webcast on navigating government relief measures for MDs. I hope you and your loved ones are healthy and managing through this challenging time. My name is Martin Grzadka. I am a partner at Wilk Grzadka Group, and I'm thrilled to be your host for today. We wanted to create an open dialogue around COVID-19's impact on the economy and financial planning implications for MDs. In today's session, we will be discussing which government measures MDs are eligible for and having experienced a reduction in income due to COVID-19. We will complete the webinar with a touch on fundamental planning principles that are important to your long-term financial well-being as a medical professional. What's important, our goal is to share meaningful context and clarity into what this means to you and your families, and to help provide greater confidence in your long-term financial plan and overall well-being. Before we start, just a bit of technical housekeeping. I wanted to bring your attention to the console we will be using for today's session. You should be able to see a video window with a speaker, Monica, waving at you right now. You should also see a PowerPoint slide. If you cannot see this or have trouble hearing us during the broadcast, just go ahead and refresh your browser window by doing a hard reset and reload the URL at the top of the screen. You can also close the browser window and rejoin us shortly after. With that, I would like to introduce your speaker, Monica Wilk, Senior Executive Financial Consultant at Wilk Grzadka Group.
Thank you, Martin, for that warm introduction and for a few of the housekeeping items. As always, when it comes to technology, sometimes it could be difficult. We're going to get started right into the presentation itself. This is our lovely team that you have the opportunity to deal with. And for those of you that are joining us for the first time, welcome. Today, I hope to cover with you a few things. The first one would be the tax extensions. Second one would be measures supporting MDs, physicians, dentists, and then we'll finish off with a little bit of a summary. So none of these things are brand new in the last week or so. They've been coming out over the last month. And so most of you have applied for some of these or for all of them. Today is more focused on making sure that you're taking advantage of all of them and making sure that if you're hearing it from colleagues or from anyone else, that you're on the right path. So we'll quickly start with tax extensions and the dates to remember for filing your taxes. On the individual side, we would have already filed our taxes for the year, but we received an extension. That extension is June 1st. However, our taxes are not due until September 1st. So if you've already filed and you owe taxes, you don't actually have to pay them until September 1st. You also don't have to make your installment payments. So if this is the case for you where your income is affected during this time and it's a little bit harder to meet your goals, I would say delay the tax installments on the personal side until September 1st, and we have until June 1st for that filing, so a couple more weeks. If you're not incorporated and you're considered self-employed, you haven't had a chance to incorporate yet, the deadline for filing is actually June 15th. And then again, your taxes are not actually due until September 1st. And for corporations, there hasn't been too much of an extension for filing, so it's still 6 months out. However, if your taxes were due anytime between March and May, they were delayed, and all the filings or all the taxes were also delayed and installments delayed until September 1st. And then moving on to trusts. So for those of you that are holding trusts and are looking at filing or were looking at filing because it was due in March, that was extended. The extension happened until June 1st. So that's coming up. And then again, the taxes don't have to be paid until September. An interesting fact about the trusts is now that the government has lowered interest rates, the prescribed interest rate that we are going to be using going forward, starting in June, is 1%, versus the 2% that was introduced a couple years ago as interest rates started to climb. Then when we look at GST, HST, it also has been extended, so you have until the end of June to file for that. My favorite part about this is that CRA is going through a lot of auditing with the new rules, new legislation that was introduced for income sprinkling and passive income, especially for professional corporations. And they hired an extra 200 auditors, and we were going to be going through that right now. They've delayed all of that, so it gives us a little bit of time to make sure that everything is done properly, that we have all the contracts in place. So that's things to remember is pretty much none of the taxes are due until September 1st. However, if the government owes you taxes, then I would file as soon as possible so that you can qualify for some of the other things like child benefits and the HST deferral or a defined benefit. So the first section of the presentation, we focused on physicians that receive a T4. Physicians that receive a T4 would be anyone that's in academia. So we see some of our MDs are affiliated with universities. And if you are in that space, you're probably receiving a small salary, whether it's $40,000 to $60,000 that's coming to you as a T4. And so that would qualify you for the next couple items that we're going to discuss. You may also be working in a community clinic or a hospital. So if you're receiving a T4, and the best way to check for that is to look at your 2018 taxes and see if you have a T4 that you filed. The other part of it is that with the new rules that changed and income sprinkling being looked upon in such a negative way, more MDs were forced to pay their spouses a salary versus a dividend. And so if you fall in that category, then this would be also the next couple items that we're going to discuss. Your spouse would actually qualify for more so than you yourself if you don't have a T4. So to begin with, if you have a T4 and your income has been affected during this time, what you can qualify for is the Canada Emergency Response Benefit, or now it's commonly called the CERB. If you have been filing unemployment or paying into unemployment, then you can qualify for employment insurance. However, most of the time what we see is that CERB would be actually the better one to apply for, as it's very quick. Now, all of these that you're applying for, you want to make sure that you have My Login or the CRA My Login account. If you have that, it makes it a lot easier. If you don't have My Login or My Business Account Login, there's a way to bypass it, but you still have to apply for it. So everything is online, and it just speeds up everything. So some of the benefits of having this one is it gives you a benefit of $2,000 a month or 4 weeks, and it's $500 a week for a period of 16 weeks. So even if you were in a position where you were on maternity leave, parental leave, you were working, or it's your spouse and you were paying your spouse and now you don't have to pay your spouse, or you were paying yourself and now you don't have to pay yourself. So that wage, you can apply for this. So it's only $8,000 total benefit, but if you fall in that category. Also, if you had to kind of adjust your work schedule because you have kids at home, this is also something that you can qualify for. And we've been actually seeing that our clients' kids are applying for this. So anyone over the age of 15 and anyone that had an income of $5,000 or more in 2019 qualifies for it. So if you're in a position where you've been paying your kids a little bit of a salary for doing filing, bookkeeping, or anything in the clinics or in your professional corporation, then they would also qualify for this. So it's goes a long way. And recently, about a week ago, the government has changed that you can earn up to $1,000 in that period. So another $1,000 can come from wages or earnings, and that won't jeopardize you getting your CERB benefit. after the 12 weeks, the government is saying that if you still need some assistance, then you have to file for EI. And so if you haven't been paying into EI, then obviously you wouldn't qualify for that. So that's on the CERB side. It's very easy to apply for it. You go onto my login CRA account and you go that way. The other support measures for people that are considered T4s or employees would be the mortgage support, but this is really for anyone that has a mortgage. The banks have set up a deferral program for up to 6 months. What you have to remember is that after the 6 months, your interest is accumulated. So therefore what happens is your payments actually go up slightly. So I wouldn't really recommend getting a mortgage deferral unless the situation was really demanding for that. But from what we see, we usually end up having enough money in emergency accounts, in the corporate accounts, in personal accounts, that we could carry the mortgage payments. But if you fall in that category, or someone that you know falls into that category of deferring that mortgage payment, then perhaps you could speak directly, because it's a case-by-case basis when it comes to deferring. And then student loans. So if you have kids that are in university, or they just graduated, or they have any student loans, those are being deferred for 6 months. So moving on to the Medicine Professional Corporation, and we're going to have one section with employees and one section with no employees. So whether you have a medicine or a dentist professional corporation, this applies to both. It's a professional corporation that we're discussing today with employees. So the government did 2 tests. So if your income has declined by 15% or less in the month of March, or 30% or less in the month of April, then you would qualify for the next following benefits. And they are the Canada Emergency Business Account or the Temporary Small Business Wage Subsidy. So this is for somebody that has employees, you do have a corporation, and your income, even though it has been affected, but hasn't been affected to a greater level from what we have seen. So just to go over the Canada Emergency Business Account, I think we're seeing physicians and dentists applying for this one the most. And you can apply it per corporation. So we have dentists that have multiple corporations and they're applying for each corporation, and you qualify for it. The caveat to it is that that you have to have paid wages. So hence you have to have employees. And if your spouse is an employee, then you do qualify. If you've paid yourself a salary, then you do qualify. If you're on a dividend only for yourself and you don't have employees, then obviously you wouldn't qualify. But if you do have employees and you're paying a wage, the wage doesn't have to be large. So it's anywhere between $20,000 at the minimum side, all the way to $1.5 million in wages for 2019. And basically what it is it's access to $40,000 interest-free for the next year and a half. And if you repay this back by December 2022, then what the government is saying is they're going to give you a 25% discount, or you're going to get to keep $10,000. And so if you apply for it, but you may not use it or you may not need it, then you can give it back. And what the benefit of it was that you went through that process, which is a simple process, and you gain $10,000 if you actually need it. So their government is making quite specific stipulations that you should be using it for corporate expenses, because we've been getting a lot of clients calling us saying, I have an extra $40,000 to invest, which is great, but we have to show a paper trail. So we have to show that we are using this $40,000 to cover corporate expenses, and dividends is not one of them, but wages to anyone else would be. And then furthermore, it could be licensing, it could be rent, anything to do with running the corporation. So that's okay with it. And then what will happen is if you can't repay the $40,000 by December 2022, the government has scheduled a 5-year term for you to pay that back. So if you don't pay it back by then, it's not a big deal. You're gonna get 5 years to pay it back, but they won't give you that 25% to keep. So they won't give you that $10,000 to keep. It'll be essentially an interest-free loan until December 2022. And then the other one is the temporary small business wage subsidy. And this is a small one. So if your income hasn't declined by too much, but you still have employees, you can qualify for up to 10% of their wages. So it's only about $1,300, $1,375 per employee. And there's a maximum of about $25,000. And we haven't seen, to be honest, a lot of our clients applying for this one. Usually their income has been greatly more affected than just this. Now, if your revenue, like I mentioned, has declined by more than 15% in March and more than 30% in April, so basically you're in a situation where perhaps your clinic is closed or perhaps you're not seeing the billings coming in yet, then you would apply for the following. So the Canada Emergency Business Account, so that's the $40,000. And just to mention, you apply for that wherever you do your business banking. So your personal and your corporate banking, where you do your corporate banking, that's where you want to apply for it. And then we're going to go through right now the Canada Emergency Wage Subsidy. So I think this is a big one if you do have employees, because you can essentially keep those employees, but the government is willing to cover the wages of 75% to a maximum of $847 per week per employee. And there isn't a specific amount of employees that they'll stop at. So if you had 30 employees, you could do it for 30. What we've seen is that most clinics are keeping on 2 or 3 employees, just to make sure that patients still have a way to communicate and to reschedule their appointments and emergency cases and so on. So this is of benefit to anyone who's running a clinic and still needs some staff, some employees to actually function properly. So the government is saying, we're hoping that you're going to cover the other 25% of that. We're going to cover the 75%. And you will cover the 25%. And then that way, the employees are not using any other benefits. And of course, that 75% that you're going to get as the corporation or the employer is going to be taxable to you. And so it goes from March. And the way that they did it is if you qualify under your income dropped more than 15% in March, and then more than 30% in April. It's one or the other. It doesn't have to be consecutive, but that's exactly the way that it happened. So this is a great one. We've seen a lot of MDs using it in a really good way to kind of make sure that their clinics are still operating at a minimal level. And we've been getting a lot of questions when it comes to layoffs or severance pays and dismissals. So if you have a corporation and you have employees, one of the things that Martin and I talk about is having an employment contract. And this is what CRA is saying, is that if your spouse works for you and you're paying them wages, you better have an employment contract, because if we audit you, that's the first thing that we're going to ask for. So whether it is your spouse or whether it's a staff of 2 or 10, you want to have employment contracts. And so during COVID, what we've seen is that, yes, there had to be a lot of layoffs. And usually, sometimes what happens is that we don't know what will happen exactly. But what could happen is that some of those employees will not come back right away or may be laid off permanently. And so you do have to go back to your employer-employee agreement and see what was the setup that you had, what's the severance pay. And if you need to contact anyone, we have an employment lawyer that we've been working with for the last 7 years and helping our clients to put those agreements in place. So it's still a contract. It's still, you may be responsible for extra payments, just the way that you would be if someone was getting laid off. Now, if you're a corporation with no employees, and this is the next set of relief benefits is for you. So you can apply for the Canada Emergency Business Account. The only people that really wouldn't qualify for this is if in the last year you were paying yourself dividends, because if you have no employees and you have been paying yourself dividends, then really you have no wages of that $20,000 that you need to qualify. And if that's the case, we've done a cost benefit analysis because we do have few clients that are dividend only because it works for their structure. And the benefit is essentially that if you're dividends only, you're not paying into CPP and you're not paying into EI, and automatically you're getting a benefit of about $10,000 more a year. This benefit is also $10,000 and it's a one-time, versus being dividends is $10,000 of benefit every year. So it's not something to really get upset about. Then the latest thing that you don't have to apply for, but we have seen be introduced by the Ministry of Health, is the top up for physicians. And so what they've discussed is that some specialties especially have seen a drop in their income by about 70%. And so that's quite unreasonable, especially if you're the sole income provider in your family, to function for the next 2, 3, 4, potentially more months. And so the ministry has stepped in and said that they're going to look at your earnings the last 12 months or the 2019 year. And if they have dropped by more than 70%, they're going to top you up. So if your income is at 50%, they're going to top you up by another 20% just to get you to that 70% level. It happens automatically, so you don't have to apply for it. And if you don't want to receive it or accept it, you can, from what we understand, is actually issue a check back to the ministry. But the way that it works is your payments would actually come in for the month of May. So the middle of May, June, and July. So we would have 3 months of earning up to 70% of what your wages were the year before. And what happens after that is that you have to essentially pay this back because it's an advancement starting in November over a 5-month period. So if you need this, this is great with your cash flow to making sure that you're keeping your contributions for savings the same, or you're running your clinic properly and so on. So this will definitely help, especially if you have this, and then maybe you could qualify for any of the other measures that we discussed today. But if you strictly don't want to have a lower income starting in November, then just keep it aside and we can send a check back to the ministry. And then finally, for retired physicians, what we've seen is that the government has introduced a decrease in your RIF minimum. So if you're retired and you had an RSP and then you converted it to RIF and you're drawing it down, every year based on your age and based on how much money you have in your RSP, the government every January sets an amount by percentage, usually from 4% to 12% the older that you are, that you need to absolutely take out from your RIF account. So until age 72, you can determine that amount yourself, but after 72, it's predetermined for you. So this is for anyone who's beyond 72 and who is forced to take a RIF. You can decrease that RIF by up to 25%. So if that puts you in a little bit of a lower tax bracket, or it helps with the old age security, then this is definitely something that we've seen our clients be interested in. And I would definitely review this one, because 25% could be significant. Some of the other things that we have read about and that have been introduced is relief measures when it comes to hydro. So hydro is doing their own relief measures for residential and businesses. Insurance payments. So on my side, you know that I deal a lot with insurance, and the personal insurance side of things, disability, critical illness, term, permanent, all of the companies have come together and said the grace period of 30 days has been extended to about 90 days. So it gives you extra time if you can't make your payment. And usually we're on annual payments anyways, just to get a discount. And so if you fall in this category where your premium is coming due anywhere between March to June, they're willing to extend it by 90 days. If you have a permanent policy with Sun Life, one of the features to highlight is that you can actually skip your payments or take a payment premium holiday for up to 2 years, which is great. If your income has been quite affected by this time, then maybe that's something that we should look at. Rent relief. So we've been seeing a lot of talk about that. The great news is that from what we understand, rent default rates are around 5%. So it isn't that much. And then mortgage payment deferral, like we discussed, up to 6 months. And what we've also seen is credit card. So if you phone in your bank and negotiate, you can now negotiate on credit card rates. So we've seen them as low as 10% versus the given 19 or 20% that they're usually at. So whether that's for the corporation or that's on the personal side, you can call, and now that you have maybe a little bit more time, you can look at it. So these are all the different relief measures that really apply to a physician or a dentist or anyone with a corporation. And we're going to do a summary page for you. We have a write-up that we've prepared. Also, we're willing to share this deck so that it condenses the information. It summarizes everything in one area. It helps you to navigate as to where you need to go. Because I think that's the one most confusing part, is that you have to look in different areas for these different relief measures and see if you qualify for them. But the first thing that you want to do is make sure that you have your My Account, whether it's on the personal side or on the business side, set up. That will help a lot. But we will share this with you. And just finally, just finishing off the presentation with a couple more slides. We have probably about half of you joining us that are not clients. So just to reiterate for our clients and for non-clients, is that what's most important in the MD journey is that you have clearly outlined your goals. You have clearly outlined what your savings patterns need to be. What's your cash flow? What's that year of transition or that time frame for transition? What's the expected rate of return? Once you know all of this, and we review this, and every single time that we have a discussion, we go back to the plan and say, hey, as long as we're meeting our goals, we really are not concerned with what the markets are doing. Let's try to take advantage of what's happening in the markets. But we've seen a big difference over the last couple of months as we're bringing on new clients. The worry and the uncertainty that comes with not having that plan and not having somebody to prompt you for what you should be doing next. You kind of feel like you're carrying that whole responsibility on your own shoulders. So we're here to assist with that. And having a written financial plan is really the best way. And so this is where we kind of our team fits into your life. We service the entire family. All of our clients are mainly physicians, dentists with families. So we look at not only just the MD, but we also look after their spouses and kids and trusts and so on. So we kind of try to coordinate everything for you. So you have your own set of professionals. It's your accountant and your lawyer. And if you don't, then we've been able to provide that for you. But also what we've been able to assist for your plans and for our clients' plans is with having dedicated team of accountants and lawyers that are looking after wills and reviewing wills and looking at complex estate cases and we have accountants dedicated to us that are looking at more restructuring or selling of a practice or where we need to put in insurance and so on. So all of that is kind of what we do in the background for you and with you. And it's just to kind of bring in the big picture into what's happening, especially with COVID. It's a great time to look at all of this. And then lastly, every single time that we have a review with our clients, it's my responsibility on the team to kind of what I call a stress test. So I open up their plan and I go into a section which allows me to input data that's actually happening, given the rate of return, given the savings, given the current market values. And I run that projection by using a Monte Carlo analysis. And what that does is that it plays with the sequencing. So usually when you say that your expected rate of return is 6%, it's really hard to calculate that when you take it, because that when you try to develop a calculator for yourself, because you assume that 6% happens every year, when in reality it's not the way that it works. And this is a perfect example of it. So last year we had growth of 20%, and this year we're down 5%. And so the sequencing of numbers really takes a toll on our savings and us meeting our goal of transition. So a lot of our clients, not necessarily that they want to retire, but what they want to know is that, they don't have to work anymore, and that working is their choice, and they're making their own schedule, and they're transitioning into retirement or into doing something different. And so for us, what's most important is trying to test that plan, test those numbers to make sure that we're getting there as close as possible. And if we're not, then usually what we end up doing is suggesting a few other things. So if we say, maybe perhaps you need to stop dollar cost averaging into the market now, but perhaps looking at putting some more money as a lump sum at this time, or rebalancing, or whatever it may be, all those strategies that we end up discussing is really to get you closer to that goal. So hopefully today, this provided a good summary for you of what you're entitled to. Send in your questions by email to monica.wilk@igpwm.ca. I will be happy to answer anything specific or help you navigate through any of the programs or find out a little bit more for you. We're starting this series of webinars, and this is our first one, but we're hoping to get some information out to you on a bi-weekly basis. And that way we're not having to call you and you sit through or send you more emails. I'm sure you're getting enough of that already from us. So this will be recorded, and you can play it for yourself or pass it on to anybody that you think could use this information. So thank you. This brings us to a close at about 30 minutes as we promised. And like I said, please send in your questions if you have them, and we'd be happy to share everything with you. Take care.